What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did have another very volatile sell-off even though we did have the Dow Jones squeaking out a flat day. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.73% and we did come back down to retest that previous low right around SPY levels of 416. Now, so far, this is very bearish price action because we still have a strong downtrend and we still have price action trading below all of the moving averages. And the last thing we saw SPY do was come back down, break through support at 428, come back up to retest that level as resistance, bounce off, and then come back up and retest that level as resistance yet again, and then bounce off and make a new low. So if we see SPY breaking down below 416, it's very unlikely the low at 411 is going to hold up, which does mean we're more than likely on our way back down to close that gap at 400, which is also our downside price target. Remember, we have downside price targets because we're in a strong downtrend, and there's no reason to expect the price action to go against the trend until we get a bullish breakout. So in the event we get a bullish breakout, you're going to see SPY first breaking back above 428, which as I just showed you is a very critical resistance level that continues to push price action lower. So SPY above 428 will be the first sign that we're starting to see some bullish price action. And then we still do have that gap to fill up there just below 434. And the next bullish breakout will be back above 441, which is our resistance trend line in our 50 EMA. So there's really no reason to be overly bullish in such a strong downtrend until we at least see some sort of bullish price action breakout. We're more than likely trending lower to fill that gap at 400, but just remember there's no guarantees in this market, and I would not be surprised to see a little bit of a bull trap before we hit that price target. The reason I say that is because we do have extreme fear readings, and when everybody expects something to happen, the market usually does a little bit of a fake out move before it actually does the real move. So more than likely continue to expect a bearish March. Even if we do start to get a bullish bounce in the next couple of days, I wouldn't trust it and it wouldn't necessarily invalidate the price target at 400 until we get all the way back above at least 439 to 441. So continue to expect more downside and continue to respect the strong downtrend, because anybody getting too cute with the downtrend and trying to go against the trend for any long period of time is underwater on their position and more than likely getting stopped out or ready to capitulate. Now, in the event we do reach a capitulation, we could go lower than SPY 400, but that's our price target until we see how price action behaves at that level if we do get to that level in the near future. There's always the possibility this is a 3-month correction, so expect to have a bearish month until we can at least get through the end of the month, especially because we have so many catalysts this week with FOMC and quad witching on Friday. On the NASDAQ 100 triple Qs, we were down 1.92% today, and we made a new daily low closing below that level at 323. So on closing prices, we continue to make new lows. So as you can tell, it's a very strong downtrend and the price action continues to close below support. And we now have price action below all the moving averages for the third day in a row. So from here, we're very close to hitting our price target at 315, which will fully close that gap. And it's hard to believe we got all the way down here to the previous low and we're not going to fully close this gap. So that will be quite the bear trap if we don't close that gap and start to bounce from here and never look back. But I seriously doubt we're not going to fill the gap when it's right next to us and you can smack it with a stick. Now, if we break down through support after closing that gap, we do have another level of support right around 308. So watch that level as well. The first signs of a bullish breakout will be back above 339 and then getting back over this level right around 341. Above there, we got to get all the way back above the 50 EMA, which is currently sitting just above 352, which is also another strong resistance level. So continue to respect the strong downtrend in the triple Qs until we can start getting some bullish price action breakouts. And we're clearly very far away from those levels, so it's not going to happen anytime soon. We'll see it coming from a mile away because we're in a strong downtrend. We're not just going straight from a strong bear trend straight into a strong bull trend. So if you're worried about missing the next rally, don't worry about missing it because it's going to be very obvious and there's going to be plenty of traps to reverse such a strong downtrend. It's going to take a lot of energy for the bulls and it's not going to just be a V-shaped bottom recovery from these levels. In the Dow Jones, we were flat on the day, so not selling off like the rest of the indices, and we see the Dow Jones going up 0.02% today. However, there's still not too much bullish to talk about because the price action is still below all the moving averages and we still do have the strong bear trend. So in the Dow Jones, you have critical support levels at 326, 322.6, and our price target at 315, which is our confirmed double top, as long as we're below this neckline level at 340. You can very clearly see we were rejected from that resistance twice, and we continue to form new lows. So the next time we break down below 326, it should be a quick trip down there to that price target at 315, and then we could start talking about the possibility that this correction is over. But until we see a bullish breakout above 337 or 344, you should be expecting this strong downtrend to continue to push price action down towards our price target at 315. So until we get a bullish breakout, continue to expect lower prices, and that does give you the opportunity to short at any of these resistance levels. You have resistance at 333 and our 20 simple moving average at 337 and again at 340. In the Russell 2000, we were down just over 2% today, and we did break down below that level at 193.8, and we're heading back down to 191, which is a very strong support level. If we break down below that level and start to close below it, you're more than likely going to see the small caps trending down towards 170 with support on the way there at 183. So it'll be a very bearish breakdown below 191, and you have upside resistance at 197, 200, and 204, and your bullish breakout levels aren't until we get back above 204, breakout above 207, and close above 212. So there is a lot of room to the upside before the bulls can prove themselves and scare away the bears. Don't be getting bullish on the small caps until they can at least get back above 207, but if you want to be more conservative, wait until it closes back above 212. On the Arkk ETF, we were down 5.92% today, and we continue to see this bear market roaring on, breaking down and closing below the lows at 57 and trending down towards our target at $50. Below $50, this is just a laughing stock of the neighborhood ETF, and it's more than likely heading down $10 lower at a time. So below 50, expect Arkk to be trending down towards 40. You can't get bullish until it can at least get back above 65, but I would wait for a daily high back above the previous daily high, so that would require a close back above 71. Your 50 EMA is just below 73, so don't be getting bullish on something that's in such a strong downtrend, because as you can see time and time again, it continues to go lower than you would expect. So down below 50, expect it to trend towards 40, and don't be getting bullish until it can at least get a daily close back above 71. On the VIX, we were up 3.32% today, and we see the VIX staying in that elevated level, still closing above 30, so we still have a very volatile market, and the VIX is still on a daily bull trend. Remember, as long as the VIX is in these elevated levels, you need to be very cautious of a prolonged bear market, which could be telling us we have more downside coming, which we really aren't surprised because we still do have outstanding price targets to the downside that we haven't yet met. Now, in the event we do see the VIX getting crushed, you're going to be getting a lot more bullish on the market if the VIX can break down below 24 and close below 20, but that's still a ways away and we still have the VIX in a bull trend. If the VIX starts spiking back up into the high 30s, we're going to see a very volatile sell-off that could lead to a capitulation. So watch those critical levels to the upside and the downside, and right now the VIX is telling you to remain very cautious. Remember, as we come into strong support, that volatility does work in both directions, so you could still get a very bullish bounce even in a bear market. On Bitcoin, we're currently up 2.87%, and Bitcoin is trading just below 39,000. The only thing we really need to watch on Bitcoin is this double top look, so a breakdown below support at 37,000 will be sending Bitcoin all the way back down to $30,000. So we're getting very bearish below 37,000, and we're getting a lot more bullish on a close back above 45,000. Everything in between is just going to be a volatile trading range, with resistance levels right around 39,000, 40,000, and right around 40,700, which is going to be your 50 EMA. If we could start breaking out back above the 50 EMA and take out this high at 42,000, it will be looking a lot more bullish, but wait for the confirmation back above 45,000 to get overly bullish. On NVDA stock, we were down just about 3.5% today, and we're coming back down to this support level right around 209. If that support breaks down, you're looking for a quick trip to 197 and then 192, and I think there's a real possibility that could be the bottom on this stock. Obviously, it's in a strong downtrend and we don't want to try to call a bottom, but there is the possibility if we get a strong bounce off that level, it could have been the bottom, so pay attention to that level very closely. To get bullish, we need to start closing back above 236 and back above 246, so watch those levels closely. If we can go higher and break out above resistance without losing the low at 209, that will be a bullish multiple bottom look, and that could tell us we're going all the way back into the low 300s, but we'll need to wait for the confirmation of the price action to break out before we start getting bullish. So wait for the bullish breakout, otherwise expect more downside with the price target down there at 192. On Tesla stock, we were down 3.64% today, and we still see Tesla is in the full bear trend and retesting some very critical support. We have support at 763, which is currently holding up, but if we lose that support level, you're looking for a retest of the lows at 709, and then below that we have that price target at 592, which comes from our confirmed double top. Remember, we're in a double top look with a price target at 592 as long as Tesla is trading below 900, which it is very clearly doing so. So don't be getting bullish on Tesla until it can at least get back above the 20 simple moving average, which is currently sitting right around 841. Above that, we'll still need to get a bullish breakout back above 900, and then confirmation that we're going back on the bull. We should see a closing price action above 937. So watch those critical levels to the upside for the critical bullish breakouts, and you'll also still have resistance at 827, so watch that level as well. On Apple stock, we were down 2.66% today, and we did see Apple losing that support level at 152, so it's more than likely coming back down to 147. It did leave a small gap to fill to the upside, which is just above 154, so we could go up there to fill that gap before we see any more downside. We have critical resistance now at 152.7, 157, and 162, and don't be getting bullish on Apple stock until it can at least get back above the 50 EMA, which is currently sitting at 165. This is very clearly a bear trend, and price action is losing support levels, so continue to expect more downside until we get a bullish breakout. On the financial sector, we were up 1.26% today, so the financials are starting to bounce from here, and they still do have a gap to fill at 37.6. So look for that gap fill, but don't forget we are in a bear trend. So once that gap fills, it could find resistance and we could continue to trend lower. On the industrials, we were up 0.34% today, but we still have the bear trend and we still have price action below all the moving averages. So don't get bullish until price action could get back above the 50 EMA, which is right around $100. On the healthcare sector, we were up 0.71% today, and price action did get rejected at the 50 EMA. However, price action is closing back above 3 of our 4 moving averages. The next time the healthcare sector breaks above the 50 EMA, it could be a bullish breakout, and we could start to see a bull trend to go close the gap at 141. The energy sector was down 3% today, and we see energy did close back down below the 5 EMA, but we still have a strong bull trend, and we still do have relatively bullish price action. If the energy sector can start closing below our 20 simple moving average and break the support trend line, we could see a rollover and then start going through a correction to come close some of the gaps to the downside. If the energy sector does roll over and lose the bull trend, that should be bullish for the rest of the market because this money is much better off in other sectors like financials, industrials, and tech, which have much more weight by market cap in the S&P 500. So jumping back over the S&P 500, as you can tell, this is still very clearly a very strong downtrend and price action is continuing to be pushed lower. That's going to be the scenario until we get a bullish breakout, so continue to expect more downside until we hit our outstanding downside price targets or until we get bullish price action and get confirmation of a bullish breakout and lose the bear trend. The trend is your friend works in both directions, and you can very clearly see the strong downtrend is not going anywhere anytime soon, so continue to respect the strong downtrend and watch those very critical support levels. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.